Hey, good morning, everybody. Hope that your weekend is kicking off in the right direction. Right behind me, I have some sitting ducks. Yeah, I've changed the artwork up from your view. Normally, I'm sitting here with Keith, and we have the backdrop of a really beautiful painting that our friend Wes did on not necessarily the history of capitalism, but some really cool stuff about capitalism. Like it allows you to travel, it allows you freedom of movement. I mean, you can go anywhere. You just jump on a plane, jump in your car, and you can travel. But here we have these sitting ducks behind me. And if you've been in our office, you know, you've seen these paintings, the sitting ducks, the failures of Marxism. I think we talked a little bit about that last week. And then I'm going to elevate up here a little bit. Kind of tougher to see, but up there you have two ducks, and they're sitting on a just a mountain, beautiful view. And what they're sitting on are dollar bills, and they're watching the dollar bill sunset go down. And that is the failure of capitalism. Say what? How could we even say that on the show? Yes. Yeah, just sitting on that stuff doing nothing. Uh, Not the best. So anyway, good morning and hi from our conference room. I wanted to sit here today because I know we have friends who join us from all over the place. And boy, I wish that you could come here and have a meeting with us. That would be really cool. So I'm inviting you in. I'm going to go ahead and share the disclaimer with you guys. Just remember, emergencies happen. Think through your plan. If you were on the call last week, you may have heard an emergency that happened here at Gimbal Financial. We had a a pipe issue. If you've ever had something go wrong, if you've ever owned a home, then you know that stuff happens, that stuff goes wrong. If you've owned a building. And so normally when stuff goes wrong, it is expensive. And so if you need to know how much you should have in your emergency fund, it's probably the cost of like a furnace or an air conditioning unit, or the cost of a pipe burst. That might be good too. So anyway, all of this content on this webinar is it's basically designed to help provide education, allow you to lean in and see what our views are on the stock market, our opinions. We've got opinions. They might be wrong, they might be right, but our goal is to not be indecisive on opinions. So we'll cover things like the S&P 500, which is an index, and NASDAQ, another index, the small cap 600. Again, those are small companies, but not too small. They all own jets. So anyway, now let's stop sharing this here. Okay. Yesterday, I had the privilege of some windshield time. Maybe you're a traveling salesman, or in your role, you've done some traveling for business. I really don't have to do a whole lot of traveling for business these days, but every now and then we do. And Keith is doing some traveling right now. He's actually with one of you, and he is traveling down to Southern Indiana. One of our good friends and clients passed away, and he's going to his funeral today to celebrate his life. But yesterday I was doing some traveling as well. I was traveling south to Madison, Indiana, and I'm just going to pop this up here. Let's see. Yes. Okay. Let's see. Have you seen this? Are you familiar with it? That is a bridge that connects Indiana to Kentucky, and it expands over the Ohio River. the Ohio River is mighty. There were some big logs floating in the Ohio River when I took that picture. I didn't see any barges, but there were some big logs floating down. And it's pretty quiet right now. But do you know what happens in Madison, Indiana around the 4th of July, underneath and alongside of this bridge? Let me show you just by scrolling down. This is from my good friend out in Phoenix. He sent me this picture. Check it out. You see that? Yes. That is a H1 hydroplane boat. And those things are so sweet. They'll be riding along the Ohio River like 200 miles an hour. And you can go and see it. You can go and see it this summer if you want to head to Madison, Indiana, and check this boat out. Interestingly enough, Strong Racing is the name who owns this boat, and they are a racing group out of Washington. Most hydrofoil racing teams are out of Washington. And they're there kind of like in Charlotte, North Carolina. They house all the NASCAR stuff. And then here in Indianapolis, we house a lot of IndyCar teams. So, these groups all get together and teams share what they know. They help each other out, and they build a culture of pursuing excellence. And I got to hang out with the Strong Racing team last summer for the Madison Regatta, and it was just a beautiful thing to see high performers in action. So I don't know if you're going to be able to do some traveling coming up, but boy, I really would encourage it, even if it's just picking a destination that's within reach and taking a drive. On my way down to Madison, saw a bald eagle. It was great. So anyway, adventures are out there. Let's talk about where we are in the adventure of the stock market. In the stock market, when you're an investor in the stock market, it doesn't have to be exciting. Okay, I say adventure just because it's something that I enjoy. I mean, I wake up excited to look through stock charts and to see what's going on. And but it doesn't have to be exciting. It doesn't have to be scary. And I think one of the really hard lessons of investing is just learning to manage your emotions and protect your mindset. It can be really tricky, especially when it comes to money and markets and when things seem out of control. And so anyway, let's go ahead and take a look. Okay, here we go. I wanted to highlight the NASDAQ first today. The NASDAQ is a list of 3,500 or so companies. A lot of these companies are going to be focused on growth, not as concerned about dividends or paying back the shareholder, rewarding the shareholder with an income. The NASDAQ is primarily focused on growth, and when companies are doing well, they're taking that growth and they're reinvesting in themselves. Perhaps it's reinvesting in new technologies. Maybe it's reinvesting in people or plants or facilities. And the aim is to make the operation smoother. And so several of these types of companies that make up the NASDAQ are the ones that you might see on social media or on your handheld device or in the components that make your car so fantastic to drive. And these are leading edge companies and very innovative companies. And so typically the swings can be a little larger, the ups and downs with the NASDAQ type companies. And so what we have is, you can see if you've been following, this for the past year or so, you can see we started off the year last year in a downtrend, and it's just been slowly coming down all the way through the end of December. Keith marked up this chart for us. He did a really good job. He showed us that the NASDAQ bottomed out here. When is that? Back in October, mid-October. And we haven't gone below this level, which is a great thing. Prior to October, not only had we tested lows of the summer and of the spring, but we kept going through them and building new lows. That's not very healthy for the market. However, right here, this follow through day, about a week after the low, the market started to show some strength. And basically with a follow through day, what we have is we have the market moving up, and it's doing so on better volume, where we have some buyers coming in. And this is not this is not my Uncle Bob. This is not your Aunt Sally. These are institutions. They could be a big mutual fund. They could be an insurance company. They could be a university endowment. But large institutions saying, hey, we want to participate. We're going to start buying. That's what was happening on this follow through day. And so that's been great. We've hit some pauses recently, and then we shot up right at the beginning of the year. January looked great. We moved through the 200-day moving average for the first time in forever, like the first time in like 12, 13 months. And so we started to see some really just good positive action happening in the NASDAQ. And then here today, it is down today, it's given back. But really all of this, guys, is fairly healthy. We're still above the 200-day moving average, which is great. The 50-day, which is this red line, is starting to move up. So the last 50 days in the stock market have been looking a little healthier. Something I would like to see with the NASDAQ, I would like to see this 50-day moving average cross through the 200-day. And so if we could see that, if we could see this red line cross through the 200-day, that would show us that there's added strength coming into the markets. Okay, so that's the picture of the NASDAQ. And let's switch gears. We're going to take a look at the S&P 500. This is probably the most broad-based index that's spoken about today. It's the one that you're going to hear on the evening news, or if you pop open like your iPhone, it's got a tracker of the S&P 500. But the S&P 500 has really started the year off very well. This is January right here, and prices started to move through the 200-day, came back down, and then moved through it with pretty good price conviction. And then here, as of late, it's like the NASDAQ started to sell off a little bit. But here's something positive. The 50-day moving average crossed through the 200-day, okay? And it did that February 1st. So that's very positive. We like to see that. And my guess, and the market doesn't really care about my opinion, but I'm going to give it to you. My guess is we see some choppiness in the next few days, where we see some ups and downs. And it may even come back to test this 50-day line. That's about 2%. That'd be a 2% swing. And so we'll see. By next week, we'll know. But we're listening to the stock market. I'm going to switch and show you one last chart. This is the S&P small cap index. And so these are going to be smaller companies, small to medium-sized companies, still top employers in your state. If you were to look at the top companies in your state, you'd see several of these small cap 600 index type companies. And boy, the 600 just really rocketed through. 50-day is above its 200-day average. That's strong. And it's just trying to figure out what it wants to do right now. And a lot of that is motivated by interest rate talks and what's happening. So that's just a quick summary on what's going on in the overall stock market. When you hear somebody say the stock market, what is the stock market? I mean, it could be the Dow Jones, which is just 30 companies. Yeah. Could be the 600, could be the 500, could be the NASDAQ. That's why we like to show all of those different charts, is because it gives us a better picture on what's going on. And keep in mind, all of those charts, they represent individual companies. And so we like to also look and see what's going on under the hood of the S&P 500. Who are the top companies? What sectors are doing well? Is it financials? Is it utilities? We like to look at those. There's 11 of them in the S&P 500. For several years, Keith and I, we had subscribed to a institutional research firm. And I really like these guys. They're out in New York City, and they've been around forever. And there are several institutional research companies out there who would love to sell you their research. And when you think of that, think of it like this. A researcher is diving deep into a company's results. And so when a company comes out and says, here's our quarterly earnings report, this earnings report is normally brought to us by some type of phone call, video call, where you have the CEO or the CFO announcing the results, telling about where they've been, telling about where they think they're going. And then the research analysts all dive in and they scrutinize the report. They try and get an idea of where that company could be going into the future. And a lot of it is guessing. Here in Indiana, we had like 55, maybe 60-degree days in the last two days. It's been wonderful. And today, when I left the house, it's like 20 something. And so I always have this empathy for the weatherman, because they're trying to forecast what's ahead. The closer they get to tomorrow, the more likely that they're going to be right. So if they're trying to say, hey, tomorrow's going to be 35 degrees and sunny, they've probably got a pretty good chance of that forecast being right. But if they're trying to forecast a 10-day, it gets a little more difficult. And so same thing, research companies, stock analysts, they're taking that company report and they're trying to decide, what are the annual earnings going to look like? What is this going to be? And anyway, I grasped a report from our friends, and it reminded me of something really important. The report started off and it said that we believe that this company may be of interest to a larger company or private equity concern. In fact, during the last year, management was eyeing the potential sale of the company, which garnered the interest of a few private equity firms. Okay, so it's chatter, and this is the stuff that CNBC, not to pick on the stock people, but the stock media, but this is the type of stuff that they use to fill their time on their shows. Is this idea of maybe this could happen, and it could. In this case, it didn't. and so it's just another reminder to let the market tell you. Let the stock or the ETF or the mutual fund tell you. And it just comes back to what you learned in high school economics course, which was supply and demand. If that merger is happening, more and more people are going to know about it and want to get on board with it. But it doesn't mean that it's actually going to be a done deal. There was a pretty well-known company last year where there was a lot of hype built on, is this person going to come buy this tech company? And it went back and forth and back and forth. And so in the time of waiting for a company to be bought or merged, there might be better places for your money, or there might be added risk built in. So anyway, I thought that report was worth sharing with you, just to remind you to just stick with what you know. And the price isn't lying. It's not guessing. It is what it is. It's the price of the investment. And then the volume, it's just math. It's just showing who is buying these shares. Anyone? Are they buyers? Are they sellers? Okay. Some of you, if you've been to the office, you may have seen this lying around. This is the Indianapolis Business Journal. I really like this paper. The team over there has done a great job with this paper for years. I see this at some of your offices too. And there's a column in here that's it's in every week, and it's by a guy named Pete the Planner. Pretty clever, huh? And I like this Pete the Planner guy. I think he's different than me, and he's a very gifted communicator, a very gifted writer. But he wrote an article in this week's edition that I just really appreciated. And you remember the Dear Abby type stuff? Well, maybe, but the Dear Abby, where someone would write a letter, Dear Abby, my son ran away. What should I do? And then Abby would tell you what to do. Well, this was a Dear Pete letter. And the letter was, Dear Pete, we haven't met with our financial advisor in 5 years. And since that time, we've had 3 kids, we've had 2 job changes, and we received an inheritance. And so the financial picture has dramatically changed. And Pete's advice was, call your financial advisor. Call him, call her, tell her what's going on in your lives. Give her the update. Give her a chance to hear you out. And I was really encouraged by that, because this is a journey. And I think so oftentimes financial planning is pretty one-sided. And I hear this from Keith. I love working with Keith, because we work in a big office, and so I pick up things that he's saying. And one of the things he says is that financial planning in our industry is really directed top down, where you would have the financial planning expert on Google say, this is what you need to do. Plan for this. Start now. Here's the math. And all of that is well and good. And there is a place for that. On the Gimbal financial profile question, we ask you some of those quantifying things, like, what is your current savings account balance? Your 401ks, your house, do you own it? Do you have a mortgage? Those quantifiable things are important. But instead of taking the approach on financial planning of whatever the Google expert is saying, why not define what financial planning is for you? Because it might be different, because you may have an interesting life. You may have stuff that you're wanting to do that isn't the Google template, or the financial planning business's mold, or the financial services industry's best technologies forecast. There might be something that is better out there. And it's something that's uniquely you. And so Keith and Amanda came up with these questions, and I love them. And these are great questions to ask yourself. And of course, any of us here would like to hear what you have to say. But it just starts off like this. Check it out. What two things would your partner want to do this year? What would Caroline like to do this year? Well, I can tell you, spring break is a really important thing to her. And so we've got to go somewhere. Okay. To know what your partner likes to do, what your wife, your husband likes to do is critically important. Why not do that? Okay. What two adventures would you like to accomplish before 2026? And I'm going to do some real quick Muncie Central math, about 3 years. And so what two adventures would you like to accomplish before 2026? And what's stopping you from doing that? What are the things that are holding you back? Is it your health? What could you do about that? Is it finances? Is it time off work? Is it, I don't want to do that by myself? What's holding you back? And to think deeply through those things. Now, here's where it starts to get good. And all of this is in the name of allowing you to define retirement. Okay. And when you define retirement, how does that look for you? What would your spouse or your partner say about that? How would they define it? Would they define it differently? You probably have to take yourself out to coffee and think about this. But this is where it gets good. Suppose you were to celebrate your 80th birthday today. What two things would you look back on with the greatest joy? And it's okay if it's a Porsche 911. That is just fine. It's okay if it's season tickets to the New York Yankees. Whatever that is, that's okay. But digging a little deeper, like ambition wise, if you could look back and say, hey, these two things, if I could look back on when I'm 80 years old and just have joy thinking about those things, that would be amazing. Would those two things be the same thing as your closest loved one to you? Is that what they would say as well? So if you begin with that in mind, or if you've been walking through life with us for a long time, which I know many of you have, it's time we take a look at these questions and say, what is it? If I'm looking back right now, what is it that I would like to see? And then let's help get you there. Maybe you're already there. And the question is, how can I help my son when he's 80 years old look back and have success and like what he sees? These are the great things of financial planning. It doesn't have to be all quantitative. It can start with that, but the quantitative stuff, I don't know anybody who looks back and says, yeah, that was my number one, was my savings account balance. Last thing I just want to share with you guys, many of you are still working and you have 401ks or a simple IRA. Some of you are self-employed and you may have a SEP IRA. You may have just a bank account. You may have an individual stock account that you inherited. And with all of these things, it's really important how you title them and that you have beneficiaries. And so I pulled off a 401k beneficiary form. This is from Nationwide, but these forms all look the same. They basically just say, if today was my last day, where do I want my money to go? You'd have primary beneficiaries, and you're also going to have contingent beneficiaries. And so I would encourage you to dust off your beneficiary list. Make sure it's who you want your money to go to. But thank you for joining us. Don't be the sitting ducks. And I'm so if you're watching this, you're not a sitting duck. You're not a sitting duck. You got stuff going on, and we want to just we want to add fuel to the fire of the things that are exciting you in your life and that are important to you. So we'll look forward to seeing you next week. And I just hope that your weekend is spectacular. Okay, bye-bye.